Well, hi there, everybody. It's Vic Noble here with another weekly trading example, which I'm going to put out early this week because of the holiday in the States and the non-farm payroll, and the fact that I'm going to be leaving to go out of town tomorrow has a lot to do with it as well. So I wanted to get this up to you to have a look at. For those that don't know, I do the coaching sessions, the personal coaching sessions on behalf of Forex Mentor, and I put out these weekly trade examples just to help people with reading the markets, hopefully, and getting a better handle on which direction to trade. In this example, we're looking at the U.S. yen. This is a daily chart. Now, of course, the easy money is always made trading in the direction of these trends. That's obviously buy the dips in these big uptrends is a very good thing to do on an intraday basis. However, they don't go up forever, and you want to be looking also at signs of tops once in a while. And in this case here, you see how we'd had this little inverted hammer, and we'd had some negative price action. I've been also following this trend line for quite a while. Look at the touch points on it. There's a lot of them here. It's quite a good trend line, and I'm just going to keep an eye on that. Um, we have room to come back down to the trend line. So if you go look down at the hourly, pardon me, the 4-hour chart, what was happening was this. We'd had a run up. This actually happened on Sunday. Sunday evening, early Monday morning, depending on which time zone. I'm talking North America here. And in this case here, price had rallied up on the 4-hour chart, but it stopped right here. It was actually at a Fibonacci level right here at 123.50 area. And look what the candle action did. You see how it started to hesitate and then made a spinning top, a bit of rejection, and then started to go down pretty good right here. You know, it's useful to then go look at your lower time frames to see if there's a good low risk trading opportunity setting up. So this is now the hourly chart. And on the hourly chart, you can see what's happening here. The concept of market flow that I teach in the coaching sessions shows us that the market flow is down here. And I like to see it on the higher time frames especially. You can also see that we actually had a little, I'll just put a little line on here. We actually had a little bit of MACD negative divergence going on here. See that? Where the price was going one way, but MACD was going the other way. Okay, and so keep an eye on these things. They can be little clues that we might be at an important level. Now I'll just take those off, and I'll show you what else was going on here that kind of intrigued me. This entire area of, if you look at this whole 123.30 area, right in here, where price had problems before, was quite a significant level. You see how it had a very hard time getting above it. It finally did get above it, and then it held several times in here, and then once again broke below. You see, so and then when it finally breaks below here, this is a very important area to watch for. Well, if you go over to the 15-minute chart at this time, what had happened was the following. You can see this big drop that we had here, and then it starts to rally up. And these are the same old lows that we were seeing on the hourly chart that were causing so much interest. And this all happened to match up with several other reasons to expect resistance. And when you and in fact there was like a triple confluence of reasons to be expecting there to be a resistance, pretty good resistance at that point. Those are the kind of places that you want to identify as places to sell. Okay, because if you figure that you're in a downtrend, you want to sell the rallies, and you want to sell it at these kinds of places. And while you can see what happened, it did hit this area right up in here. See that? Right where we were expecting it to go, and fell off and just kept peeling off here quite nicely actually, and made both of our extensions down here for the first one hit for a 45 pip net profit, and then 67 pips at the second one. I think the first one was right in this area right in here at 122.74, and the next one was at 122.52. Okay, so it's a top-down process. You want to start and get an idea of what could be happening at the higher levels, and then structure a trade to the lower levels that give you a nice high reward, low risk trading opportunity. You guys have a great weekend. Happy Independence Day to all of our American friends. And I'm going to be back next week with another trading example. And so we'll talk to you then.